Alfonso Cahero, A Journey into Finance History, Chapter 48, Black Monday Stock Market Crash, 1987. The autumn of 1987 was unremarkable, the year passing in the mundane rhythm of daily life. The stock market, a barometer for the health of the global economy, seemed robust. Traders in the bustling New York Stock Exchange, NYSE, moved with the confidence of seasoned professionals, eyes glued to the ticker tape that reported the unceasing rise of stock prices. Wall Street had become a symbol of American prosperity. The bull market had persisted for 5 years, swelling with the unbridled optimism of investors. It was a time of financial euphoria, with the Dow Jones Industrial Average climbing to unprecedented heights. On October 16, 1987, it closed at a staggering 2,246.73, a record that seemed to promise endless growth. Among the traders was John Thornton, a veteran broker with a sharp mind and an instinct for the market. He had witnessed many ups and downs but was confident in the market's current trajectory. Thornton's routine was methodical: coffee at dawn, a review of global markets, then a dash to the exchange floor where he would immerse himself in the whirlwind of trades. His office, a small corner cubicle on the bustling trading floor, was his command center. Thornton had spent the previous evening analyzing market trends. His conclusion: the market was unstoppable. But there were whispers, small murmurs among the more cautious analysts, about an impending correction. John dismissed these as the usual doom and gloom predictions that always accompanied a bull market. That weekend, he hosted a small gathering at his home in Greenwich, Connecticut. Among the guests was his close friend and fellow broker, Maria Sanchez. Maria was as perceptive as she was passionate about her work. Over glasses of fine wine, they discussed their outlook on the market. "John," Maria began, swirling her glass, "I'm getting uneasy about the market. It's been climbing too fast. The fundamentals don't support these levels." John smiled, a confident yet reassuring gesture. "Maria, we've seen corrections before. The market has always bounced back. Besides, our clients are making money. Isn't that what matters?" Maria sighed, knowing John's optimism was as steadfast as a rock. "Just be careful, John. We've seen bubbles burst before. This time feels different." As the weekend drew to a close, the city prepared for another week of trading. The atmosphere was charged with the energy of a market that seemed invincible. But beneath the surface, hidden from the exuberant traders and investors, fault lines were beginning to form. The global financial system was interconnected in ways that even the most experienced analysts could scarcely comprehend. In Tokyo, London, and Frankfurt, traders watched the American market with a mix of envy and trepidation. The U.S. market's performance was a bellwether for their own economies, and any disruption could ripple across the globe. In Tokyo, Takeshi Nakamura, a young trader at a major brokerage, was particularly anxious. He had been following the American market's rise with a mixture of awe and fear. The Nikkei index mirrored Wall Street's ascent, but Nakamura felt the pressure building. His father, a seasoned trader before him, had always warned about the dangers of unchecked optimism. Meanwhile, in London, Elizabeth O'Sullivan, a financial analyst at a prestigious investment firm, was burning the midnight oil. She had identified worrying signs in the American financial data. The rapid rise in stock prices was not matched by corresponding growth in corporate earnings. The disparity made her uneasy, but her warnings fell on deaf ears. The firm was too invested in the bull market to heed her cautious outlook. As dawn broke on Monday, October 19, 1987, the world seemed poised for another day of financial prosperity. The air was crisp, the skies clear, and the hustle and bustle of traders signaled business as usual. Little did they know the stage was set for a catastrophe that would become known as Black Monday. John Thornton arrived at the NYSE with his usual punctuality, his steps echoing through the marble corridors as he made his way to the trading floor. The air buzzed with the usual pre-market excitement. Traders exchanged greetings. Some shared optimistic forecasts, while others prepared for another day of high-stakes trading. As the opening bell rang at 9:30 a.m., the initial trade seemed routine. However, within minutes, John sensed a change in the atmosphere. The ticker tape, which normally moved at a steady pace, began to speed up, displaying a cascade of declining numbers. It was as if a dark cloud had descended upon the trading floor. "What's happening?" John muttered under his breath, his eyes darting from one screen to another. He noticed that stocks across various sectors were plummeting simultaneously. Blue-chip companies, once considered safe havens, were seeing their prices drop precipitously. Maria Sanchez, standing nearby, caught his eye. "John, something's wrong. Look at the volume of sell orders. It's unprecedented." The usually orderly trading floor descended into chaos. Phones rang incessantly, traders shouted orders, and the electronic boards flashed red with alarming frequency. The Dow Jones Industrial Average, which had opened at 2,246.73, began its precipitous decline. John's heart raced as he tried to make sense of the situation. The sudden drop was unlike any he had witnessed in his career. He quickly contacted his clients, advising them to hold steady, but panic was spreading like wildfire. The more seasoned traders, who had weathered previous market downturns, were struggling to maintain composure. On the other side of the world, in Tokyo, Takeshi Nakamura watched the unfolding events with a sense of dread. The Nikkei index had already closed lower, but the news from Wall Street signaled a deeper crisis. As the American market continued to plunge, he knew the ripple effects would soon hit Japan with full force. Elizabeth O'Sullivan in London was equally alarmed. She had stayed up to monitor the American markets, and what she saw confirmed her worst fears. The FTSE 100, London's main index, would open in a few hours, and she anticipated a similar panic. Back in New York, John Thornton was in crisis mode. He gathered his team in a huddle, trying to devise a strategy to mitigate the losses. "We need to stay calm and make rational decisions," he urged, though he himself felt anything but calm. The market was in freefall, and there seemed to be no bottom in sight. By midday, the Dow had fallen over 200 points. The scale of the drop was unprecedented, and the mood on the trading floor turned from anxiety to outright fear. Rumors swirled about the reasons behind the crash. Some blamed automated trading systems, which had exacerbated the sell-off by executing orders at lightning speed. Others pointed to geopolitical tensions and rising interest rates as contributing factors. John received a call from his largest client, a wealthy industrialist with substantial holdings. "John, what the hell is going on? My portfolio is bleeding." "We're doing everything we can to stabilize the situation," John replied, trying to project confidence he didn't feel. "This will pass. The fundamentals of the economy are still strong." But as the day wore on, the selling pressure intensified. By the close of trading, the Dow had plummeted 508 points, a loss of 22.6%, the largest single-day percentage decline in history. The impact was staggering. Billions of dollars in market value had been wiped out in a matter of hours. The aftermath of Black Monday was chaotic. The financial world was in shock, trying to comprehend the magnitude of the crash. Analysts and economists scrambled to understand the causes, while policymakers debated measures to prevent a recurrence. The Federal Reserve stepped in, providing liquidity to stabilize the markets, but the damage had been done. For John Thornton, the day ended in exhaustion and disbelief. He sat at his desk long after the trading floor had emptied, staring at the screens that had brought news of ruin. The euphoria of the bull market had given way to a harsh reality. The market could fall as fast as it rose, and no one was immune to its capriciousness. The days following Black Monday were a blur of frantic activity and sleepless nights for John Thornton. The NYSE remained a hive of activity, but the atmosphere had shifted dramatically. Fear and uncertainty replaced the confident optimism that had characterized the trading floor just days earlier. Investors, shaken by the magnitude of the crash, demanded answers. John spent hours on the phone, reassuring clients and explaining the unprecedented nature of the events. The markets continued to be volatile, with wild swings that left even the most experienced traders on edge. Maria Sanchez, always perceptive, had anticipated the fallout. She had taken precautionary measures for her clients, moving a portion of their investments into safer assets before the crash. As a result, her clients fared better than most, and her reputation for foresight was bolstered. Despite this, Maria knew that the financial world had changed. and she and John spent hours discussing the implications. "John, we need to rethink our strategies," Maria said during one of their late-night discussions. "The market's behavior has fundamentally changed. We can't rely on the old models anymore." John nodded, the weight of the past days evident in his weary eyes. "You're right, but where do we start? The entire system seems to be in flux." Across the Atlantic, Elizabeth O'Sullivan was dealing with the aftermath in London. The FTSE 100 had experienced its own significant decline, though not as severe as the Dow's. Elizabeth's warnings had earned her grudging respect from her colleagues, and she was now seen as a voice of caution and prudence.